In this video, traders, we're going to look at what is pounds per point and how does it work. Stay tuned. Hey traders, a warm welcome to you. Alright, so maybe you've just started spread betting, and maybe you're thinking of getting into spread betting. You've seen something that takes your fancy, kind of how does the whole thing work? I keep seeing this pounds per point. What is it all about? So hopefully in this video, I'm going to give you an overview of how it works with some trades from different kind of markets. Because the beauty of spread betting, of course, you can trade multiple different markets. Got a FTSE 100 example here, a Euro US dollar, a Facebook, and a Tesco example. So losing trade, winning trades, different position sizes, etc. So you can get an idea of how the whole thing works. Now we've got a channel sponsor, spread betting company. Check out in the description below if you haven't yet got a broker, or if you're still weighing up your options, see if they're right for you. Okay, so pounds per point works like this. Effectively, it's what it says on the tin, right? You have a points movement in your favor or against you, and for every point that moves, you're going to make or lose your stake. So if your stake is £1 per point, that basically means that for every movement point up or down, there's a pound movement in your trade valuation, or if your account equity as well, if you like. So if you're long £1 per point, which effectively means that you are bullish, you want the market to go higher. If the market goes up 100 points, you can make 100 points times by your stake, which is £1 per point, £100. If the market goes down 50 points and you were long £1 per point, you're going to lose £50. So it's very simply easy to understand, and you can lose more or win more by either having a larger pound per point. So if you have £10 per point, you're going to have 10 times the amount it goes up as your £1 a point, but also on the flip side as well. Or the market can move even further in your favor. So to make 1,000 points, for example, you have to have 1,000 point move at £1 per point, or 100 point move at £10 per point if you want £1,000 gain. So that's how you basically work it out. So let's have a look at some examples, and because there's some nuances between the differences, hopefully these will highlight some of the major nuances. So let's look at the FTSE 100. Super popular, super kind of popularly traded products, commonly traded products, should I say. So in this example, let's say market's pushed up and you think, for whatever reason, and by the way, if you're new to the channel, hit the subscribe button and have a look around and kind of have a little browse of all different videos. We've got some strategies, got some mindset things, as well as some tips and hints as well from some of the great traders out there. So FTSE 100, example, we're looking to go long. I want to do £3 a point. So long £3 a point, current price is 7,419. So it'll be quoted as 7,419 as our buy price. And there'll be a spread involved in that. So the sell price will probably be a point, something like that. So it'll be 7,418 to 7,419. I'll just put that there as well for information purposes. But for this video, we're going to talk about pounds per point as opposed to the spread. But you're going long here at 7,419. You decide to do £3 per point, and your target is 100 points higher. So if you're correct, you're going to make 100 points times by your stake, which is £3, £300. Okay, so what happens is, in this example, great, you get it right, you happen to get this bull flag, it's congesting nicely, breaks out to the higher side, you're long £3 a point at 7,419 as you've executed through your broker. Market goes up, hits your price target of 7,519, you close the trade when the bid is 7,519, press sell, which will be selling your, and same size, so sell £3 a point, that'll net you off to zero, and you'll capitalize on the difference. In this case, 100 points times by £3 a point. So it's a £300 profit on this trade. Okay, now in the FTSE, a point is the fourth digit. It's going to obviously depend on what the FTSE is by the time you're watching. The FTSE could be 10,000 by the time you're watching this video, but it's basically the last digit. So even though they may quote, let's say a little 5 there, a little 2, like we'll look in a second here, it's actually the larger number that actually counts as the point when you're looking at spread betting. So in this case, 7,419, if it goes to 7,420, that's 1 point. Any change in the other number after it, like 7,419.2 to 7,419.7, so half a point would be half a point movement. All right, so let's look at Euro US dollar. So Euro US dollar slightly different. a scenario we've got here is trading at 1.1385, and then we're quoting it again with this little small number underneath it, like 1.13852, and that's to distinguish that that's a tenth of a point. What you're looking at here is this number here, that's the whole point. So if that's moves 1, then that's 1 point movement for or against you. So let's say, for example, here you wanted to short this, you thought it was run out of steam for whatever reason, wanted to short the euro US dollar, you would short, and let's say we're doing £4 a point this time, £4 a point, so we're selling 1.1385 to the price at 1.13852, for example. So that's the price we get filled at, so we're going short, we're looking for the market to go lower. Our market goes lower, goes quite nicely lower, but it starts to come back against us, and we don't want to let it come back. We've decided we're going to come out of the position here. So we close it at 1.13652, and again, I've just used the twos, make it easy to calculate, it could be anything that. The difference there is 20 points, right? Because it's 1.13852 minus 1.13652. So it's 20 points movement. And remembering, it's these two numbers here that we're looking at. These are the tenths here. 20 points, we've made 20 points on here. So it's 20 points times our £4 a point. That's going to be £80 profit. So we would have made £80 on that trade. All right, so let's have a look at some other ones here. We've got Facebook. So Facebook, slightly different, and I've got two different equities, one from the UK, one from the US. Now, you've got to be careful here. A little tip, guys, is that the US tends to, well, does quote their prices in dollars. So Facebook's trading at 189.67. That means the price of the share is $189.67 per share. Now, if we look at something like Tesco, the price is 220.5, but that's in pence. So it's quoted in pence. So in actual fact, the price of that is £2.20.5. So it's a lot of difference. You've got to be careful about that. So your position size is going to be a lot smaller on the US shares, generally, obviously depending on the price, but generally speaking. And so there's an easy trap to fall into. Like, oh, well, they're pretty similar, 189 and 220, not far off. Well, actually, the order of magnitude is way different. So let's have a look at the example here on Facebook. Facebook's sitting here 189.67. We decide to go long, and many brokers will allow us to trade in pence as well. So like 50p, 10p, 20p, depending on the instrument we're trading. Again, because £1 a point on something like Facebook or £10 a point is a fairly large size. So we trade something here like 20 pence a point. We're just starting out. We kind of just want to get a feel for things, don't go too crazy. And we started to go long, 20 pence a point at 189.67. Unfortunately, we don't get it right this time. The market drifts lower, and we end up closing it at 188.67. So that's a whole dollar lower than what we opened the long trade at, or position we opened the long trade at. Now, a dollar in this instance is actually 100 points, because each cent is 1 point movement. So if it moved from 67.68, that's 1 point and one increment, if you like, of our bet. Now, because we've moved down to 188.67, that's a dollar, that's actually 100 cents. There's 100 points move against us. So to calculate our loss in that position, it's minus 100 points. We had 20 pence per point, so we've lost £20 in that position. Of course, if we had £2 per point on that and we went 100 points against us to close it, we'd lose £200. So you can see how the slight difference in the way that the US shares are traded. Now let's look at a UK share, a US stock, should I say, Tesco. So good old Tesco sitting there at 220.5. Don't forget, remember it's 220.5 pence, so we're not in dollars, we're not in pounds here, and we decide to short this £50 per point, because generally speaking, and again, have a look at some other videos if you want to get some more info on this, but our position size is going to be relative to the size of the instrument we're trading, or the price of the instrument we're trading, and the volatility of the instrument we're trading. If something is very volatile, we want to dial down that position size. If it's a little bit quieter, then we can increase the position size, but that's by the by. We're going to more strategy there. Tesco, so we're shorting £50 per point, current price at 220.5. Market then goes down by 10 points. And in this case, a point on Tesco's is going to be a 1 pence. And don't forget, because this is in pence, it's 220.5, but that 0.5 is half a penny. So the actual one whole point, 1 penny, is 1 point. So to go down by 1 point, to get that 1 point increment, if it was £50 a point, you're going to have to go down to 219.5, okay? So that 5 would generally be quoted as a small kind of 10th unit there if you're looking at your order ticket. So the market goes lower. We happen to get it right on this one. Goes lower, we'll close it at 210.5. We make 10 points on that. Well, because we're at £50 per point, 10 times that £50 a point is £500. Of course, if we got it wrong, it went 10 points against us, we'll be down £500. So there's 4 examples for you guys, pounds per point, how it works, incrementally making or losing the amount that you have, your stake as it's known, as your position size. Depending on what size you've got is going, and depending on how far the market goes in your favor or against you, is going to determine your profit and loss. Take care, see you in the next one, bye bye.